Greetings. Welcome. Nice to have you with me to discuss Chapter 7's comprehensive problem. Chapter 7's comprehensive problem is found at the very end of the chapter work. It's on page 414 and 415. It's the same company that we've been working with week after week. It's a Basilio Securities Company. It has this preliminary trial balance in here that you need to work with. So I want to make sure that I'm at least trying to show it to you. I don't know how this is coming out. It's the first time I've tried this, but you always have to work with that beginning balance. So in this case, the year is January 17. So this is the ending trial balance for December of 16. And they had $78,972 in cash. They had petty cash. They had accounts receivable, supplies, prepaid rent, inventory, and land. And those were all their assets. And so those would be on the asset side. Those would be on they would be first in the trial balance with those amounts in the debit column. And then you would have accounts payable, salaries payable, common stock, and retained earnings. They would be the last on the trial balance, and their accounts would be on the credit side. And then you would add those together and make sure that they equaled before you started work. I'm hoping that you're beginning to recognize some of these numbers, realizing that we're bringing forward from week to week some of the information that we work with. We're doing these same journal entries and T accounts so that we're getting to know this company, we're getting to know its accounts, we're getting to know how to write journal entries and post to T accounts and prepare preliminary trial balances and prepare financial statements, and then closing entries, and then post-closing trial balances. So we're doing the full accounting cycle week after week for Basilio Company. And it might be Basilio, so I'm not positive. You can let it be however you want it to sound. Now here we have this preliminary trial balance like we've had. We have the transaction entries down through 17. We have the adjusting entries from 18 to 21. And then we have our requirements. So it's the same setup that you've seen, and you're pretty comfortable with it. I'm going to bring your attention now over to the screen that you would see behind me, above me, and behind me. So this is the solution to the comprehensive problem right there. It's for Chapter 7. This is the A requirement, and it's enter these general journal entries. So here are the general journal entries. You have to put in a cost of goods sold calculation right here. Here's some more journal entries, and you have to put in some calculation for the rent for the van and the office. Here's a check figure for the total rent, so if you don't get that number, you can stop and work till you get that rent. And then here's the rest of the adjusting entries. And here's your uncollectible account expense calculation, goes right in here so that you can see, you put that right there for me to see. So these 21 journal entries are the major effort in this week's problem. I'm feeling like you are getting quite good at general journal entries. You're entering them. They're pretty fundamental. Debits are on the left, credits are on the right. The debit entry is written first and flush to the left-hand margin. Credit entry is written second, slightly indented. You're doing these calculations to determine what the amount of the journal entry would be in several of the cases. You're showing me those calculations. It's just what I want you to do, to be becoming familiar with writing general journal entries. After that, you post them to the T account. So this time you don't have to post anything to the T account. Here's all the T account balances, and you just have to use those ending balances to prepare the trial balance. So you write the general journal entries first, you show those calculations, They've already posted them to the T accounts for you, and then you make up this trial balance. Now remember, the trial balance is a list of the accounts starting with the assets. So right up here with cash, you put cash and its balance of $93,000 in the debit column. Then you put petty cash and its balance of $100. And then you put accounts receivable and its balance of $22,500. But then accounts receivable credit cards, another new account for this chapter, balance of $0. Then you have allowance for doubtful accounts, but its balance is a credit. So while it will be listed with the assets, its balance will go in the credit side of the trial balance. So you want to watch that that's a credit. Then you have supplies and its debit balance. Then you have prepaid rent and its debit balance. Merchandise inventory and its prepaid balance and its debit balance, and land and its debit balance. And then that's all the assets. They're all right over there in that far left-hand column. Then you have these two liabilities, accounts payable and salaries payable. They'll come next, right after land. You put these two accounts. There's their names, there's their balances. It's pretty much a typing activity here. Just going and finding the right name and the right balance. So I've turned the trial balance into a typing activity where you're just keeping track of all the accounts and their balances and typing it using Word. And after the liabilities comes the stockholders' equity, and the first one is common stock right here. I'm going to pull that up a bit. There's the common stock. There's its credit balance. So after this credit balance, on the very next line would be this credit balance for common stock. Here's the retained earnings with its balance carried forward from last year. Now the temporary accounts start. Here's the dividends. So it would be the next account. Now its balance is a debit balance, so it would go back on the left-hand column. And then here's alarm sales. And it's a credit balance. It's a revenue account. So this credit balance would be on the right-hand side. And then here's the monitoring services sales. There's its balance. And you put it in. Now starts the cost of goods sold, and these are all the expenses, and they have debit balance. So here's advertising expense and credit card expense and maintenance expense and miscellaneous expense, office expense, rent expense, salaries expense, supplies expense. Do you hear that word expense just coming at you one after another? Uncollectible account expense. It's a new one for you. It also has a debit balance. Here's the utilities expense. Here's cash over and short. Now it was new from last week, but we're going to be carrying that account with us. Now it has a credit balance, so be sure that this credit balance gets over in the credit column. And then we put all of those accounts in here, you do, and you then have to total these two, and they have to balance. And they should balance. The only thing that would make them not balance is either you're typing the numbers or your addition of the numbers. So one thing you could do is put this in Word, copy just the debit column, and paste it into a column in Excel and add up the debits. And then you could do the credit column, put it in another column of Excel, and then add it together, and then you'd know at least the numbers were adding correctly. And then if they don't balance, you just know you typed something in incorrectly, because unless you find a mistake in the solution, which I know you've done before, but you're good Sherlock Holmeses for me to find those mistakes. So because all of these accounts are given to you and their balance is given to you, so there's no errors that you're carrying forward. All right, after you do the trial balance, then come making up the financial statements. Here's the income statement all made up for you, so you can look and see how those new accounts look, how they go in there. Here's the statement of change in owner's equity. Many of you, too many of you actually, are missing these beginning balances and ending, beginning common stock plus and minus changes to get ending common stock, beginning retained earnings plus and minus changes to get ending retained earnings. Be sure you get those beginning and ending in there when you do your own. You're not having to write financial statements this time, so you can just see that they're there. And then here's the balance sheet, and what those accounts look like, and how this contra account gives us a book value of $21,000. So that's in there for you to see this time. Here's the cash flow statement with the cash receipts from customers for the sales and the cash payments for expenses. And here's the calculations for those. Don't be ignoring these each week. You need to get familiar with them, because eventually you're going to have to do some of these yourselves. So there's the cash flow statement. And now here's the closing entries. And for many of you, you do not get this closing entry yet. So that's all you put in here. And the closing entries are shown to you on page 70 and 71. They go that far back. And on page 155, I believe. I hope that's right. And we're on page 400. And you're still struggling with the journal entry that was on page 155. So take the time to open the book. Take the time to figure out how to close these temporary accounts to retained earnings, to how to close all these sales to retained earnings, how to close all these expenses to retained earnings, and how to close these dividends to retained earnings. So you look those closing entries up, and you enter those this time. I'm really hoping we don't have to do that entry again until we're doing it on its own. And then here are the T accounts, posting all of those closings, making all these temporary accounts go to zero, and only the permanent accounts are left open. And then here is the post-closing trial balance, cash through retained earnings, just like we see at the start of every week. And you might look at these balances and see what you find then for the opening trial balance in chapter 8, and see if they aren't exactly the same. Just what you get here in the post-closing trial balance, the authors carry forward for you every week in this opening trial balance, because whatever you had over here in week 7 for 12/31 of 17, I think, is going to be the opening for January 1 of 18. So these are always the same. They come forward with you from week to week. The work you did last week comes forward with you. So the big task this time is writing all of these journal entries, and then you don't have to post them to the T account. Somebody's done that for you already, but you have to use the results of that posting and create this trial balance. Remember, it's a list of the accounts exactly as they appear in the accounting equation. So assets come first, and the assets are right here, and they're down this column. The liabilities come next, and they're right here, and the owner's equity, common stock through all the expenses, gains and losses are right here. So you would do those transactions. Well, I hope that helps you set up. The transactions are here, and there are some new ones about accounts receivable, like number 6. So it says you has noticed its accounts receivable is growing more than desired. Remember, there was a passage in the chapter about what would happen if management noticed that the accounts receivable were growing too much. Some collection problems exist. It appears that uncollectible account expense is approximately 3% of credit sales. They decided it will, starting this year, so it's going to be now, adopt an allowance method. So they're going to switch from the percentage of sales over to the allowance method. It will record its adjusting entry to recognize the estimate at the end of the year. So when you get over here to the allowance method, it's going to tell you that you're going to recognize the expenses for the year recognized on the allowance method. In trying to collect several of its delinquent accounts, they learned that these customers have either declared bankruptcy or moved and left no forwarding address. These uncollectible accounts amounted to, so you're going to have to write off, in number 7, you're going to have to write off those old accounts against the allowance, because you're never going to be able to collect them. They sold some more alarms. They paid the balance in accounts payable. They began adopting credit cards, so you're going to have to, with number 10, start having accounts receivable credit cards. And then they replenished the petty cash, which you've done before. They collected the amount due from the credit cards. They paid some installers. They collected accounts receivable. They had an advertising expense, a utilities expense, and a dividend. Now, you've just done those over and over. You should be getting really good at doing those. This should go faster for you. For those of you who have been working together, see how much of it you can do on your own. See if you want to work together. You just say, okay, everybody enter number 1, and everybody enter number 1, and then stop and share number 1 and see if you all got it the same. Everybody enter number 2, so that everybody gets a chance to try to write those journal entries. If somebody can't find it, give them the time to go look up the page. Come back to the index back here, and if you can't remember how the sales entries are made, look up sales back here in the index at the back of the book, and then turn to the page where sales are recorded. Let that person see how sales are recorded, so that you become sort of a substitute teacher. And you don't have to sound like me to tell them to look up those pages. You can do it your own way. But help until everybody is at about the same level of competency in writing these journal entries. Because we're at the halfway point in the semester, and you really need to be writing these journal entries together, so that you will be doing the journal entries at the same time, rather than one person calling it out and everybody just writing it in. Make sure that you're working on that. These adjusting entries are on the allowance method now, and so it will record its adjusting entries at the end of the year. So I'm looking for the information to help you do that, and I can't see it myself sitting here right now. So I'm going to be thinking about how that entry is made. So that is entry number 20 for those adjusting entries. And oh, I see. I didn't read this correctly. I'm sorry. It says, it appears that the uncollectible account, it appears that the uncollectible account is approximately 3% of sales. It has decided it will, starting this year, adopt the allowance method of uncollectible accounts, but you used the 3%. I read that wrong the first time. So you'll find the credit sales, and you'll use the 3% of the credit sales for that adjusting entry. That's the simple one. I thought I was reading it to say aging when it said allowance. So that's my fault. Sorry for that. So your focus this week is on writing journal entries. And I'm really getting to a point where I'm going to need to push you beyond writing journal entries. I will run out of semester if we're still trying to write journal entries. So please work on them this week. Look up the place. I really hope that maybe you've gotten some little post-it pads or those little arrows that you could post in the book and say, here's where they are, or you've turned. The dog-earing the pages is fine, but it's really hard to find them to know what's there. Whereas with the little thin post-it pads or the little arrows, you can write cash or sales or revenues or whatever it is that you're marking, and find those sample journal entries. Maybe you're keeping a a list of the journal entries by page, so so you don't look like too much of a bookie. But that's what my children used to call the smart kids who worked the books. I don't want to look like too much of a bookie. Okay, or a brainer. Yeah, you don't want to look like you're using the book too much, or you're too much of a brainer. Don't show how smart you really are. I'll tell you the same thing I used to tell them. But anyway, let's work on getting these journal entries down, because what I'd like to do is to move on to some more of these items. Well, again, if you have any questions about anything on the comprehensive problem, please feel free to send me an email. Please come to my office hours. Please come to visit our class. It's Monday at 11 for the lecture in Siemens Hall 109, and it is Wednesday, and then at 12 o'clock we go to the lab in Siemens Hall 118, and then on Thursday it's at 11 o'clock for, generally that's where I work the comprehensive problem for you. So you're welcome to come to these and see how they go together. I might start doing some class activities just to see how you each do with your own journal entries. So keep that in mind. It won't be too scary. All right. You're welcome to email me, come by and see me, come to my office hours, come to class, whatever suits you. That's the end of my comments on Chapter 7 and Appendix E, and I hope that these YouTube videos are helpful to you, and I hope that I give you indications and directions and inklings about how to address the accounting that's presented in these chapters. It's been nice working with you this week, week 8. Now when week 8 is over, we're definitely past hump day and heading home towards the end of the semester. So keep that in mind. Keep this work up to date. Thank you and goodbye. See you around campus.